Mike here, head trader, True Trading Group, November 19th, another weekday in the markets. A lot of weakness in the markets here today. Excuse me. Let's real quick before I get into the lesson, let's talk about the overall markets just real quick because over the last week or so, I've been talking about a possible reverse head and shoulders pattern in the SPY, and today's action really puts that in jeopardy. What I was looking for, guys, was left shoulder, head, right shoulder, neckline. Okay, that is what I was looking for. Left shoulder, head, right shoulder, and here's your neckline. This is the pattern that I was looking to have form. But today's action really puts this pattern in jeopardy. Okay, we break below this previous low here. I would say that right shoulder is broken and the pattern is broken, and you got to look for a move back down into this area on the overall markets. I was surprised to see such a big move today in the markets. I was expecting kind of a nothing day. Like I was expecting the markets to kind of just do something like that today. And then, just kind of chop around like this maybe tomorrow, Wednesday, we're off on Thursday, then you have Friday's a half day. I mean, it's just, I expected kind of lackluster action. Instead, we get this, 500-point down day. We're down over 500 points at the low of the day in the Dow. We came off those lows a little bit, but still down significantly on the day. So I'll keep you guys updated, but the action today, I think, greatly jeopardizes that pattern. So we'll see what happens if this low holds. Now let's get to YECO. Guys, today's lesson is about adjusting your game plan mid-trade. Okay, that's what this lesson is all about. Because sometimes the initial pattern that you think you see is broken, but another pattern forms. All right, now the initial setup that you go after. Okay, when you first see a stock and you're analyzing the candles, you're analyzing the setup, you're analyzing the chart, you come up with your game plan. But every single candle, every new candle that gets put in, every share that gets traded, every candle, whether it's price action or volume, gives you more information to help you analyze the setup and analyze your game plan. Okay, and sometimes the initial game plan and the initial pattern that you were trading is broken, but the trade is not necessarily over, but another pattern forms. I posted a video several months ago about a very similar concept. I believe the title of the video was, one bull flag you cannot trust. Okay, if you have not seen that video, it's from several months ago. Go search through the channel, go watch that video, guys, because it's a really good one. It talks about a bull flag pattern that ends up failing only to form a TTG triangle, and the stock continues higher. And this concept of trading is a little bit more of intermediate to advanced mindset, because there is an extra layer of risk management that goes into this. And I'm going to get into that with you in a second, but it's important to talk to you about this because my initial game plan on the trade, I was wrong, but there still was a setup, and I was okay with the increased risk on the trade, so I stuck with it. And that's the key to this. The key to this is being okay with the increased level of risk, because there will almost always be an increased level of risk if you are adjusting your game plan mid-trade. Okay, so let's get to YECO, and I'll talk to you guys about what it was that I was seeing and what my initial game plan here was. YECO pushes up, gets halted, opens up for trade, pulls in, holds the trade line. Okay, holds the trade line and then just takes off and keeps pushing. As the stock continues to push, you can see steady increasing volume, okay, as the stock started to gain momentum and push itself higher. I was really starting to like this setup, guys, because the volume was consistently increasing as the stock was pushing higher, and then we got halted again. Right here, we got halted. Okay, once trading was halted right there, I said to our members in chat that I took out my Fibonacci retracement level and I drew the level out. And I noticed that at the time, guys, now realize at the time, none of this has happened yet. We were halted right here on this green candle. Okay, I said I'm looking for a pullback into this 38.2 Fibonacci level, because you can see the 38.2 Fib line at the time was lining up with the trade line and VWAP. I was looking for a pullback into that 38.2 trade line VWAP area. That I was looking to get a trade line VWAP crossover to push the stock back up towards the high of the day. That was my initial game plan. I was wrong. Okay, we reopened for trade. The stock immediately pulls back in, and I got long at 675. Let me zoom this in so you can see it. Okay, here you see at 10:12 a.m. long YECO 675, stop loss 630 area. Let's go back. Here is my entry point right there at 675. Okay, 630 I said was going to be my stop loss area. The low of this pullback is 633. You can see we bounced from 633 all the way up to 695. We tried to find support in that area, but the trade line never crossed over and above VWAP. We ended up pulling ourselves back in, and on this candle, we broke below 630. Rather than stopping out of my position, I held on to the stock. Why? The initial pattern that I was looking at was no longer intact, okay? But a new pattern started to develop. I was wrong on my initial game plan with this trade, but after getting, after 15 more minutes of trading, I was able to get more information from the stock to recognize a new level at 620. I did not recognize this level when I initially placed the trade. It was not part of my game plan. However, after 15 minutes into the trade and gathering more data and seeing what the stock is doing and reanalyzing the setup, I started to notice a new level, and that level was only 10 cents away from my initial intended stop loss. So I was okay with taking on the extra risk. The extra risk was less than a percentage that I'm adding to the risk that I already have on the trade. So I'm okay with the risk. That is very important piece of this lesson when you're adjusting your game plan mid-trade. You have to be okay with the added layer of risk. Had this new level been 8% extra away from where my stop loss already was, I'm not holding on to this trade. That's too much risk for me to be comfortable with. Okay, but less than a percentage, I can deal with that. Okay, so you can see once we broke through that 630 area right here, I started to notice that a previous high, here's a previous high, you can see these two candles, a previous high lined up with the 50 Fibonacci retracement level, and then I noticed once this high was broken to the upside, that is when we got this big strong increase in volume. Now remember, when a stock breaks through a high, the higher the volume increase on that break, the greater the chance of that previous high acting as an area of support when the stock pulls itself back in. So I noticed previous high, huge volume when that high was broken, and then you see on this pullback right into the 50 Fibonacci level, I said there's a secondary support level at 620. That's only 10 cents away from my intended stop loss of 630. You can see on my trade announcement, stop loss 630 area. So I'm already giving this to 630, and then while I'm mid-trade, I realize that there's a level at 620. So now, even though I was wrong with my initial trade idea with that 38.2 fib level VWAP trade line, I now recognized and identified a new secondary support level. Okay, and I decided to hold on to this trade down to a break below 620. If we broke below 620, I would have exited the position. I probably would have got filled around 615. Okay. And I was okay with that extra layer of risk that I was adding because the stock had given me more information, and now my analysis is changing. You have to constantly be changing your analysis, guys, as the stock gives you more information. Every candle gives you another piece to the puzzle, another chapter of the stock story, and you need to be able to analyze it. And if you're wrong with your initial game plan, it doesn't necessarily mean the trade is over. Okay, again, go back and watch that other video. One bull flag pattern you cannot trust. It's a very, very similar lesson and a great example of what I'm talking about here today. So as I pan this over, you can see that this 620 area started to hold support. Okay, so I'm still long this position, even though, why stop out at 625 if I have identified a secondary support level at 620? I felt it would have been foolish for me to stop out at 625 when we broke below 630 just to see the stock hold 620. All right, so I ended up holding on to the stock. You can see we started to have some resistance here at VWAP. Okay, we got denied at VWAP a couple of times, and I said if we get back above VWAP, this stock may make a move to retest the highs, and you may get a little bit of a short squeeze type play back to the high of the day. And surely enough, we break above VWAP, pull in, we get a trade line VWAP crossover right there. The trade line acts as a little area of support and pushes the stock up to retest the high of the day, and I took some profit off right there at 7:30. Okay, right there at 7:30. I'll take you back to my trade announcements. Took some profit, YECO 7:30, still holding some. And then I sold out of my final piece at 6:55. I was still holding on to this position, looking for a new high of the day. But then once we rolled over right there, I exited the last piece of my position. So I'm walking away from the trade small green. It's a small green trade. This is the only trade I made today. It was a small green day for me. Nothing to write home about, but a big difference in getting long at 675, selling a piece at 730, and then selling the rest at 655, than it is getting long at 675 and selling your whole position at 625. Okay, drastic difference in P&L, and was all because I was able to identify a new pattern, analyze the new pattern, analyze the new setup, and adjust my game plan accordingly. Okay, that is what this lesson is all about. Now, I'm not saying, guys, when a stock breaks through your stop loss, just hold on to it, wait for the next level of support. That is not what I'm saying. That is why in the beginning of this video, I prefaced it with saying that this is a little bit more of an intermediate to advanced concept, because there's an extra layer of risk management that needs to come into play here. You have to be okay with the new level of risk that's being added to your trade. I'm not saying by any means, guys, when it breaks through your first support level, just hold on to it because there's a secondary level, because at that point, where does it end? And then what happens if the secondary support level breaks? You're going to give it to your third support level, your fourth support level. Where does it end? Before you know it, you blink, the stock's down 25% from where you bought it. Okay, that's not what I'm saying. What I'm saying is, just because your initial game plan is wrong, analyze and be open to the fact that every candle that gets put in is the stock is giving you a new piece of information. And just because you're in the trade and you have that game plan does not mean your analysis stops. And does not mean you just kick back and now let's just wait and see if I'm right, wait to see if the stock goes up, or wait to see if I'm wrong and the stock goes down. When you're mid-trade, you need to be constantly analyzing the information that the stock is giving you in order to make these decisions. Okay, had I have just been sitting here and just, oh, that's my stop loss, I don't care what happens, if it hits it, I'm out, I would have stopped out of the trade. I would have taken a sizable loss, and the stock would have pushed up towards highs, and I would have been upset about it. But instead, I was able to identify the new level. I was okay with the new level, the added risk. It was less than an extra % of risk, and I held on to the trade after identifying this new level. I had a reason for my hold. Okay, and that's where the little bit of experience comes into play. I had a reason for holding on to this position further than my intended stop loss, set a new stop loss that I was okay with the risk, and it ended up paying off. And I walked away from what could have been a red trade. I'm walking away green on that trade. Okay, and this lesson is the sole reason for that. All right. So, guys, go back, watch that video. After you're done watching this video, go back and search the YouTube channels a couple months ago where it says one bull flag pattern you cannot trust, or a specific bull flag you cannot trust, something like that, because it talks about a bull flag setup that fails, but it fails into a TTG triangle pattern forming. And if you're playing that pattern based off of just the bull flag solely, you're stopping out of that position while other traders are getting long while that triangle pattern forms. Okay, so something to think about, food for thought. I hope this, gets your minds thinking a little bit about your trading. But again, guys, I'm not saying just hold on to your position below your stop losses. You have to have a reason for holding on to that position, and that's why I wanted to talk about this with you today. Okay? Tomorrow's TTG Tuesday, guys. The True Trading Group chat room is open free for everyone. Go to www.truetradinggroup.com, upper right-hand corner, TTG Tuesday free. Click on that. Register. You will get a link that will give you access to our chat room tomorrow for free. Chat room opens up around 7:30. Jason is in there at 7:30, one of our moderators. He goes over commodities, economic data, pre-market movers, and then I come on around 9 to 9:15. I come on and I go over my watch list and my game plan. Okay? It's free for everybody tomorrow. Like I said, guys, just go to the True Trading Group website and register. Okay? I'll see you guys in chat tomorrow. Take care.